Hi everyone, so today I'm with Dom and we're going to be covering a new company called Celestica. Dom is going to start off to see what the company does and the current earnings report. So Dom, whenever you're ready.
Thank you.
All right,
All
see
right.
it.
Can you see my screen?
Yeah, perfect.
Wonderful. So I'm just going to go over a brief overview of what they do. So Celestica Inc. designs, develops, and supply designs and develops supply chain solutions. They primarily serve design, engineering, manufacturing, logistics, fulfillment, aftermarket services, precision machining, supply chain services, product licensing services, and rack integration services. Whew, that's a lot of areas. Their product portfolio consists of hardware platform solutions. The company works with some of the largest leading brands, helping them solve complex challenges. One of these to be noted later is that actually Microsoft is one of their bigger clients. And they're located in quite a different spaces. So we have smart energy, communications, aerospace, defense, capital equipment, and health tech. They also have other industries within spaces. So enterprise communications. This is already mentioned before, but they do mention a few others, consumer robotics as well. And then they're also present in North America, Europe, Asia, and they're headquartered in Toronto, Canada. So as you can see, kind of have a pretty big space that they can be in a lot of different areas. So let's kind of dig into their Q3 2025 financials and kind of see some of the highlights. So this article is a little bit older. It's from October of this year, but they actually are going to be releasing probably Q4 within January, and so we'll probably revisit them in not too distant future. But just kind of go over them right now for Q3. Revenue, they had 3.19 billion, increased 28% compared to 2.5 billion for third quarter 2024. Pretty good. GAAP earnings from operations as a percentage of revenue is 10.2% compared to 5.5% for Q3 of last year. Adjusted operating margin non-GAAP 7.6% compared to 6.8% for Q3 2024. GAAP earnings per share at $2.31 compared to 75 cents for Q3 2024. Pretty impressive there. Adjusted earnings per share is at $1.58 compared to $1.04 for Q3 2024. So overall, Q3 2025 for them, very good. A lot of stuff. Just honestly, just doing great numbers. Can't complain. The rest of this article just more or less talks about the investor call, so it's not too much extra for us. But we'll let Matt go over at this point, and we'll talk about the financials of how they're looking, and we'll dig into that.
Okay, thank you, Dom. I appreciate it.
Thank you.
All right, so like Dom was saying, they've been doing very well. This company is actually up significantly for the past 5 years. And to be quite honest with you, it's incredible. They're up like over 3,000%, and I'm not making that up. You could check on Google or even Yahoo. But we're gonna see now their current future growth and to see what's going on. So right now we have 398 million free cash flow. The next 3 years it can be 670 million. So it's not quite a double. And I think that's because maybe perhaps growth is slowing just a smidge. Now, but it's not at all that bad either, to be fair. Now, the financial health of the company, I think it could use some work. You have a lot of debt. Of course, you have equity higher than the debt, and then you have the cash. So I think, yeah, they do need to work on decreasing the debt or reducing debt. So they have that here, and it has been going up the past 5 years. So you do have to be a little bit careful of that. Now, when we check my DCF is going to say that it's 21% overvalued. That's just based on, well, really Wall Street historical, they're pretty much the same thing. Historical is going to say 30%, so 30% overvalued. I do agree. I think they've had quite a rally already, and they are quite, I think they're already up like 228% for the year. Like they're already on a tremendous run. So you have to just keep in mind that they're just doing very well altogether, and they've just been on a huge run, and it's natural that if they sell off, then perhaps it's a good time to purchase a couple of shares. And lastly, we're going to check Tipranks, and Tipranks is going to say that it is strong buy, 10 buys, 2 holds. We have that it's 23% upside. You have a high of 440, an average of 374, and a low of 305. And to be quite honest with you, I don't know how much I agree with that. I mean, probably there is a little bit of decent upside, but I don't think it's quite too much just because they've had a tremendous rally so far. And I'll probably wait for shares to drop a bit. Dom, is there anything else you wanted to add?
Uh, Not too much. Doing pretty well, and can't
Yeah.
wait to keep a watch on them.
Yeah, definitely. Yeah. Okay. Perfect, Dom. Thank you. I appreciate it.
Thank you.